All right, what's going on, you guys? Welcome back to another video. Today we are going to be talking about stop loss placements and how to stop micromanaging your trades. So for the first half of the video, we're going to be talking about strictly stop loss placements. I'm going to show you all the examples of where valid stop loss placements can go, and then towards the back half we're going to be talking about how to stop micromanaging your trade. So it's going to be like half technical, half psychological today, and the reason for that being is I got off a few Discord calls with my one-on-one mentorship students, and they all asked me relatively the same questions, and then there was a few times in our general chat where this has gotten brought up as well. So thought it was a good idea to make a video on this. So with that being said, let's jump right into it. All right, before we jump into it though, on a scale of 1 to 10, how nice is that view? Anyways, all right, so starting with stop loss placements, you have basically three different types of stop losses. Okay, you have your hard stops, which is basically what 99% of traders do. You have your soft stops, which is you manually exit a trade. You don't have a set position set, and then your trailing stops for when you are in profit. Okay, so we're gonna go over hard stops first because this is the most common. Before I can jump into it, 50% off, lucid trading right now, go LoeGpa, whatever. Okay, hard stops. Four of the most common types of hard stops where they're going to be being placed: above and below swing highs and lows, okay, above and below order blocks, above and below opening prices of candles, and above and below unmitigated fair value gaps on the lower time frames. Now, it all depends on your risk and your trading rules. However, depending on your trading rules, I do want to go over all these examples in the market real quick. So as you can see right here at market open, we ended up creating an SMT. We had an AMD with accumulation manipulated higher, created the SMT, swapped out this high, and then we got heavy displacement lower with this inversion fair value gap right here. Okay, so I want to go over just the opening price of candles real quick. So if we were to take a short off of this candle right here, there was so much displacement in this candle. Okay, this was about what, a 60-point candle, where if we truly are bearish, there should be no reason why we even come back up near this price anyway. So this is what I mean by pricing it at the opening price of the candles. As you can see, the inversion, we opened right here at 30,065.75. We ended up getting our entry point at 0.14. Okay, so we're entering at 0.14, and you're just going to place it above the opening price of the candle. This is when all of our other stops are invalid, because if you were to place it at the swing high all the way up here, well, that's a 97-point stop loss. You're probably not going to want to do that. And then if you want to put it at the top of this order block, right, because we close beneath the series of up close candles, so this now all becomes an order block. If you wanted to put it above the order block, it still gives you pretty shit RR with the 80-point stop loss. So best case right here would either be to put it above this 1 minute unmitigated gap right here, which again, if we truly are bearish, there should be no reason why we even come up into this place anyway. You can see this tiny 1 minute fair value gap right here. You can put it above that, but for better RR reasons, you can put it above the opening price of this candle. Once again, if we truly are bearish and your trade idea is correct, we should not come and revisit this area regardless. So another example from today is if we were to take this 5-minute inversion right here and ride it all the way towards like these highs at 9:30, and then maybe we had other draws on liquidity to the left of us, let's say these highs right here as well. Okay, if you were pretty convicted that we were going to go higher and you entered off this 5-minute inversion, which is pretty premium compared to like the entries down here, but let's say we did, okay, there you don't really see any valid stop losses right here. If you were to go to the opening series of candles, that's 114 points. If you're going to go to this swing low, it's 126 points. So you're going to want to try to find something in this general area. My sweet spot for my stop losses is anywhere from about 25 to 50 points on the higher end, but really like 25 to like 45 points. But if you do come down here, you can see that we ended up creating a 3-minute order block. You can see we trended higher, put it into this down close candle, and then we closed above this series of down close candles, which is going to be right here. Okay, so we can put it beneath that order block. Here is our order block right here. Right, and that should be protected. What else is protecting our stop loss in this sense? Well, it's going to be this tiny 3-minute fair value gap right here. All right, and then if we scale down even further, we can go to 2-minute. You can see there's also a 2-minute right there. And then furthermore, if we go to the 1 minute, okay, we have a 1-minute order block and then another 1 minute tiny fair value gap right here. And you can see the 2-minute and the 3-minute ended up getting tapped into. Okay, and then what do? We ended up continuing higher, took out our 930 wick, and then took out our final draw over here to the left of us. Now for continuation model examples, you can see we have this 1-minute inversion right here. And what do we end up getting? Well, we got to retrace back into like this fair value gap right here, almost EQ of this range, not quite, but we did get a retrace into here. And again, if you still were bullish, this could work. And then we got a V-shaped recovery back to the upside. Now with this, if you were to enter all the way down here, Okay, it would make sense for you to put your stop loss at this swing low right here, or if you want a little bit better RR, you can put it at the opening price of this candles. But this is when you have a pretty good entry. If you're entering something off like this 5-minute inversion where your entry is all the way the hell up here, you're not going to want to put your stop loss all the way down here. You're going to want to put it relative to price. So again, we got this inversion right here at 10.25. Cool. This would be a valid area to put it at the swing low, but again, I would probably just put it right here at the opening price, save myself the extra 4 points or so, because if we're going to come back down here anyway, especially off this V shape, we're probably just going to continue farther and farther down. And then yeah, you could have just aimed for about a 1-to-1, 1 to 1.5 towards these highs up here, and this point in time it probably would have been break even, but eventually we did end up going and taking out those highs. It just took a little while. So regarding soft stops, which is you just basically manually closing, there's really just two most common types of it. It's just when we re-inverse the IFEG or when volatility has slowed down, and let's get into the examples right now. So for this example right here, you can see we ended up trending pretty high, okay, but we did end up taking out liquidity, and let's say for this example we are rejecting off of something to the left of us, okay, then all of a sudden we get this pretty heavy displacement lower. This candle is about 50 points or so, it's about 49.2 points, and we also get an inversion with this candle, okay. So this is typically what we would look for if everything else is going in our favor, okay. Let's say we do end up taking the short and our stops are resting at the swing highs up here, and we're trying to target somewhere like in this general vicinity down here, okay. Hypothetically, let's say this is the trade idea. If you are not to place a hard stop with these stops up here, okay, your soft stop is going to want to be when we re-inverse this inversion back to the upside, or you can see now we created a 1-minute bearish for value gap. If we inverse this 1-minute bearish for value gap back to the upside, you're probably going to want to manually close this trade, because again, if we truly are bearish, we're going to want to respect these gaps and continue lower. And let's see how this ends up playing out. Okay, and then all of a sudden, boom. So if you were to have a soft stop compared to a hard stop in this sense, you would save yourself an extra about 8 points or so. So a little bit better RR, you would get a 2.42 rather than a 2.09 on this trade idea if you were to have a soft stop. But again, I have seen plays like this where you would put it at the swing high, we do inverse this, and then we do end up continuing lower. So it's all just personal preference at the end of the day. And as far as the trailing stop losses go, this is for when you are in profit. Okay, there's really two types you can do. You can do a newly formed swing highs or lows, or newly formed order blocks. And the order block trailing is going to be a lot more aggressive than the swing highs and lows. And I will show you guys right now what that looks like. So for context on this trade idea, you can see we have equal highs resting above with a whole bunch of LR, yet prices all the way down here. So I was pretty convicted that we were going to go higher off open. I did want to see manipulation lower. That's exactly what we got. And then all of a sudden we got this displacing candle back to the upside. So we got a 3-minute inversion to the upside. Here is our 3-minute fair value gap that just ends up getting dominated. Okay. Here's what I would do in this sense. And this, I took this trade. This is exactly what I would do. There's a trade recap on it. You guys can go back and look. This trade happened on May 26th. Okay. We got the inversion. TP1 is most definitely going to be right here at this 930 wick. Okay. That can also be break even, but if I wanted to hold runners all the way up here towards these equal highs, this is what I would do. So I'm in this trade and I'm waiting for my break even to get hit in my TP1. Okay, and as you can see, boom, we ended up getting TP1, ends up forming an order block. Okay, so now that we end up forming this order block right here, you guys can see, let me just zoom in a little bit. I hate fucking doing this shit on a laptop. Boom, our order block is created right here. So instead of having your stop losses now at break even, again, we should not come down and revisit this area. So if you want, you can move it up just a little bit. And again, let's go ahead and see how this plays out. Boom, we end up continuing higher and higher. And then this is what I'm saying if you guys wanted to have a more of an aggressive approach to this trade. If you guys aren't confident in this trade idea reaching all the way up here, or you guys don't like how we're stalling, you could take it down towards like the bottom of this fair value gap and anticipate us coming hitting this fair value gap and rejecting out of it. It's really just personal preference at the end of the day. But as you can see, we end up coming down, hitting this fair value gap, and then once we form these series of up close candles right here, maybe you can trigger those stops right here. But overall, I would probably just let this play out just because we created 3 sets of equal highs. And then what do we end up getting? Well, we end up getting displacement back to the upside, and what ends up happening, we end up taking out everything. So that is one way how you can do it. Here's a swing low that got put into place. So if you guys were still having your stop loss at right here at break even, once this swing low got put into place and we re-inverse this fair value gap back to the upside, I would definitely move it to at least right here. But again, at the end of the day, it's all personal preference and whatever you feel comfortable with. So that's going to lead me, it's going to lead me to my next topic, and that's going to be talking about micromanaging trades. When you are in a trade and you are just constantly fucking with your stop loss placement, your TP, you don't know what you should aim for, okay, there's really like a handful of problems that stems from that, but the main three are going to be your psychological issues, whether it's you haven't won a trade in a while and you don't know how much money you should make and you're just solely focused on the P&L. Okay, you don't trust your setup. Okay, you're hesitant on the setup. You don't know if it's everything you should look for, or you just don't trust your abilities overall just in the market, and you need to go back test more. It's solely going to be one of those two things. I used to be fucking micromanage king and constantly fuck with everything. Okay, and what really helped me with that was scaling in and out of positions. So if you guys watch my trade recap on Wednesday this week, it was on the 26th. I took 2 contracts out of my 5 original, and I was letting 3 ride. Okay. Then I finally took 2 more out, and I was letting 1 more ride. Okay. And then we got a pullback into a 5-minute fair value gap and a 30-second inversion out of it. And I entered 1 more because that was another A+ setup. So that's an example of me scaling in and scaling out of trades. And with that second trade idea, my average point of entry, because 1 entry was down here, 1 entry was up here, so it means my average point of entry was right in the middle. I immediately moved my stops to break even. And I just let the trade ride because it was risk-free, okay? But I do understand the point where if you haven't taken a win in a while and you see you're up $350 and you're trying to aim for a 1-to-1 RR, right? You risk 500, your TP's 500, but you're up 350 and you're like, oh my God, should I get out of this trade right now? What should I do? If you're in that mindset and you're in for, let's say, like 3 to 5 contracts, take out like 1 or 2 and just let one ride. That way you secure your profits, and then you can truly see, okay, over time, I see these trades starting to play out, okay, and I'm going to start trusting it just a little bit more each and every day, just 1% every single day. And when you do that, okay, it's going to ease your psychology, A, because you secured profits for the day, and B, you moved your stops to break even, so now there's no more risk on the table, okay? So even if it does come back and stop you out at break even, it is what it is. You didn't lose any fucking money, and you actually secured money, so cool. Take your win and get the fuck off, right? You want to just take your piece of the pie. You don't always have to aim for the fucking home run ball every single day. 1-to-1s truly are king. And if you are truly aiming for a 1-to-1, and I mean like a 1-to-1, not with the 100-point stop loss and 100-point take profit. I'm talking about anywhere from like a 25 to like 45-point move in the market, and you're aiming solely for a 1-to-1, those are going to play out, I guarantee you, about 75 to 85% of the time. And that is a super high fucking win rate. So if you guys can master just 1-to-1s and not aiming for the home run ball, it is what it is. Or like I said in this video, if you want to trail your stops while you're in profit after you already took TP1, that is completely fine as well too. But trust your trade idea. And the only way you're going to be able to trust your trade idea is just showing up every single day in the market and failing just over and over and over again. It's the only way you're going to end up trusting it, because then you're going to see what works and what doesn't work. But it's going to take time. It truly is going to take time. But yeah, that's really all I have to say. I used to be micromanage king. I understand. The only way to get over it is just solely just showing up every single day, and one day it's just going to be like, okay, I'm just tired of this bullshit, because you're going to micromanage a trade and you're going to get out for $200 profit, and then you're going to watch it run another 100 points, and it's going to fuck with your psychology. Okay, so just take your profits, move your stops to break even, and then let it fucking play out. And if you want to trail, but don't keep moving that shit back and forth, especially when you're moving your stop loss. Okay, you should have a set point in price where your trade idea is going to be invalidated. Keep it that way. Otherwise, you're going to lose a lot more money than you fucking already should have. Okay, and most of that stems from being married to a bias as well, or you just can't handle being wrong. You're going to be wrong in this market, especially when you fucking first start. I've been on a little winning streak lately. I know the loss is coming. I know it's coming. It's just part of the statistics, okay? When you first started trading, your statistics aren't going to be ass. The more you trade, the better your win rate's going to be, okay? And the higher the more win streak you're on, the loss is inching near and near and near. And the higher the losing streak you're on, the win is going to be inching near and near and near. That's just how it goes. It's statistics, okay? Trust yourself. Trust your trade idea. Go back test. 50% off. Code LoeGpa on loose trades. Check it out. I'll catch y'all boys in the next one.